mentioned earlier in the previous topics are the roles of investment banks, and I hope you are already familiar with those topics being discussed. Now, let us proceed to the investment risks that might be encountered by a firm and define the methods on how we can mitigate this risk. With regards to methods of handling risk, financial risk management are one of the common problems being faced by the firms as of today. Yet before we proceed, let us first discuss what is financial risk and how does it affect the business. Financial risk is the possibility of losing money on an investment or business venture. Some more common and distinct financial risks include credit risk, liquidity risk, and operational risk. Financial risk is a type of danger that can result in the loss of capital to interested parties. For governments, this can mean they are unable to control monetary policy and default on bonds or other debt issues. Corporations are also face the possibility of default on debt they undertake but may also experience failure in an undertaking that cause a financial burden on the business. Methods of handling risk. Vital phase of risk management process based on the loss exposure analysis. Decision is made about the way to handle the risk. Trade-off between cost of risk handling and cost of risk is done. Let's see the ways in which risk can be handled. Risk management methods. Loss control, reduce level of risky activity, increase precaution, loss financing, retention, and self-insurance. Insurance, hedging, other contractual risk transfers, internal risk reduction, diversification, investment in information. Loss control. Loss control, actions that reduce the expected cost of losses by reducing the frequency of losses and or the severity of losses that occur, sometimes known as risk control. Frequency of losses, loss prevention, severity of losses, loss reduction. Loss financing. Loss financing methods used to obtain funds to pay for or offset losses that occur. Loss financing. Insurance, a contract facilitating transfer of part, full risk to another party capable of bearing the risk. Hedging, used to offset losses that can occur. Other contractual risk transfers allow businesses to transfer risk to another party. Internal risk reduction. Businesses can reduce risk internally. Diversification. Reduce risk by diversifying their activities. Investment in information to obtain superior forecasts of expected losses.
Next is insurance as a device for handling risk. So ano nga ba ang insurance? Insurance may be defined as a social device for reducing risk by combining a sufficient number of exposure units to make the loss predictable. The predictable loss is then shared proportionately by all those in the combination. Not only is uncertainty reduced, but losses are shared. These are the important essentials of insurance. So, paano nga ba nasabi na ang insurance is a device for handling the risk? Let's have an example. The man's house was insured. Suddenly, that house burnt accidentally, but he doesn't worry at all because it was insured. Man able to handle the risky situation of losing house. Sa example na ito, naipakita na ang losses ay shared. Hindi lamang ang lalaki ang may losses, kundi pati na rin ang insurance company dahil sa kanila ito naka-insured. Na-handle ng lalaki ang risky situation na mawala ng bahay dahil alam niyang maipapagawa muli ito because naka-insured. That's why insurance can handle risky situation because it gives protection. Paying premium on a homeowner's insurance policy will reduce the chance that an individual will lose their home. So, let me explain that statement using the example earlier. Diba sa example natin kanina nasunog ang bahay ng lalaki? So, kailangan niya ito ipagawa ulit using his home insurance. E di nagamit niya na ang kanyang insurance. Ang bahay niya na bagong gawa ay kailangan ulit ipa-insured para kung sakaling masira ulit, ng aksidente, maipapagawa niya ito ng agaran. Kung hindi niya ito mapapa-insured ulit or hindi makakapagbayad ng insurance, hindi na mapoprotektahan ng insurance company ang kanyang bahay in case of loss or damage. Because the primarily purpose of insurance is to protect the property in case of loss or damage and to provide protection. The man cannot handle or lessen the risky situation of losing home without insurance unless he has money. According sa nabasa ko, paying home insurance generally paid in one of two ways. Either directly to the insurance company with one-time or recurring payments, or as part of monthly mortgages payments. Apart from home insurance, there are many other types of insurance that can protect property and reduce. In summary, insurance can handle risky situation because it gives protection in case of losses and damages.
What is business? A business is defined as an organization or enterprising entity engaged in commercial, industrial, or professional activities. What is business insurance? Business insurance coverage protect businesses from losses due to events that may occur during the normal course of businesses. Do you need business insurance? Having the right commercial property insurance can keep your business protected if the unexpected happens. For example, if a fire damages your business property, you won't have to worry about paying for all of the repairs out of pocket. State business insurance required by a law? Many states require business owners to have certain types of coverage. Even though it's not required by state law, you'll likely need a property and casualty insurance policy. And you will also need commercial auto insurance if you rent or lease vehicles for your business. When you run business without business insurance, most of the country has laws stating that businesses must have certain types of insurance or a certain amount of coverage. If you have at least one employee, you must have at least general liability insurance for your business. What is the penalty for not having insurance? As you look for coverage, you may be wondering if businesses face a penalty for no business insurance. The answer is yes, and it usually comes with a costly fine. So, what's the fine for not having insurance? That depends on where you live because penalties and fines vary from state to state. The benefit of business insurance. Business insurance helps to minimize financial losses from repairing or replacing property damage by a covered loss to helping cover the legal costs from a lawsuit. Business insurance can help your business through the unexpected.